Good morning. It is May 25th, 2023. And today we're going to talk a little bit about global growth. I want us to get under the hood of growth to see what's driving it. Is it broad-based or concentrated in just a few areas? The global economy strengthened a bit in May with real GDP annualized growth at around 4%. On the positive side, China's reopening and lower energy prices in Europe supported activity. Global auto sales improved after working through supply chain issues. But we see that there's other areas that really differentiate between the haves and have-nots. Although the US Composite Index hit its highest level in a year, even through the banking crisis, the improvement was really driven by services, not the manufacturing area. And overall, the flash results showed a further decline below 50, so that's when you're slowing, in the global manufacturing PMI. And the gap between services and manufacturing is at a historically wide level. So services are strong, manufacturing is not strong. And worse deterioration in new orders and rising levels of inventory could be pointing to further pain in the manufacturing PMI. But services could remain strong. So folks, everyone's really scratching their heads, like, how do we put this together? How do we think about overall growth? And what I say is, let's look at geographies, because maybe that's where we need to spend our time. I'm going to take a look at the Eurozone PMIs first. They were a lot worse than their global peers in May. Services activity were down a bit, so 55.9 versus 56.2. But the manufacturing sector experienced a lot more pain at 44.6. Remember, that's below 50 at a slowing level. And that's more typical of recessions. But the problem is that prices paid are still sticky and rising. So in terms of the Eurozone central bank, so that's the ECB, they're going to have to keep raising rates. So imagine hearing that. Your economy is not great, you're having a hard time with your jobs, prices are high, and they're going to raise your rates even more. That's not a great situation, not going to have confidence in terms of consumer spend. And that really compares to Japan, where PMIs were strong in May. The composite index rose to its second highest level on record, pointing to a rough 5% annualized growth rate. Services were strong too. Plus, as we wrote in the arrows this morning, employment is strong, exports are strong. So many good things are happening. It's really broad-based. So I'm going to switch over to first Bloomberg and then the Longbow platform to take a look at then what's happening in the asset markets. So here I put together, there's 3 lines, and this is a year-to-date chart. And so the white is Japan, blue is China, and then red is IFA. So that's developed markets outside of the US. And so what you're seeing here is you're saying, gosh, while it was a little bit trickier earlier in the year with Japan, we've really risen and they're showing that strength. So it's on a bullish trend. You've got, developed markets overall, so that includes Eurozone, will include Japan as well, but it's gone down, it's come up, but it's showing more weakness, right? It's showing more weakness. And then China, that's been on a bearish trend. And so a lot of people got super excited during the, post-reopening and reopening last fall. And then we've seen growth really sputter out there. So unless there's, as we mentioned in the note today, we've got a pretty thick note on China, there's more stimulus or they find a way to help the banks with their rates, we're not going to see a lot coming through on Chinese growth into commodities and other areas. So now I'm going to get out of this and go to the Longbow dashboard. And when we look at this here, I've put together the SPY, so that's called a generic, US equity market ETF, the IFA, which I showed you before, Japan in particular, and then China. And so obviously we've seen a lot of pain here in Chinese stocks. The odds now are 7.8 to 1. And we mentioned in a note this morning, so definitely check it out, that people's positioning in China has really come down. And so if there's any sort of good news here, there's a lot of asymmetry in the upside. That's different than the macro, which is still pointing to some tougher times until later this year when it enters a Goldilocks phase. But until then, it's going to be pretty muted growth unless we see the government step in. But if they do, this really could be on a tear, and it's showing another oversold today. And then we're comparing that to the SPY, we're kind of in a neutral phase. It's been neutral short-term, bullish medium-term. We're kind of neutral overall in developed markets. Japan's turned medium bullish though. So if we start seeing the short-term bullish, and they're at an implied volatility premium. So people are being a little bit worried, paying for protection, and it makes a lot of sense. So just trying to put all these things together for you, people are over-positioned in Japan right now. So we wouldn't naturally go out and say, gosh, this is the time to get in there. We'd be cautious, but we do note that it has a much, much better macro setup than other places in the world. So when you're thinking about overall growth, Don't just take the big number and say, well, that's going to be a broad brush painted across all geographies. There can be winners and losers, those haves and have-nots, so you can play that on a relative basis when you're positioning your portfolio. That's it for today, and we'll see you back tomorrow.